What's going on YouTube? It's your boy bigchhet, and in today's video I'll be covering the top 5 mistakes that beginner investors will make. I personally have made some of these mistakes in the past and it was a very expensive lesson. The goal of today's video is to help you learn from my mistakes, which could potentially save you thousands, maybe millions in the future, all without paying a single dime. All I ask in return is you smash that like button and subscribe. Now, the very first mistake that so many investors will make is trying to time the market. If economists and investment greats like Warren Buffett aren't able to predict the next recession, there is no way a beginner could. You will see so much greater returns in the long run if you dollar cost average and implement drip investing. This basically means setting up a schedule where you will invest every single week at a constant rate, regardless if the market is up or down, giving the most practical buy-in price. Also, dividend reinvesting works phenomenally, with dollar cost averaging making it an excellent tool for passive income. Paying someone to invest for you at a 1 or 2% each year is ridiculous. If you have a portfolio worth $1 million, that means each year you're paying someone else $20,000 to manage your portfolio. Let's say you expect a 6% return each year on your investments. That means you're giving another person 33% of your total profits to something that you could do so easily for free. If you're interested in starting your investing journey, I will leave my link down below to sign up with Robinhood, where you can get a free stock just by signing up. My number one advice to people who want to get started in investing but don't know where to start: I highly recommend investing into ETFs that track the S&P 500 like VU or VYM. This is to diversify your portfolio, preventing you from being too openly exposed in any one sector. Alright, the third mistake that so many beginner investors will make is taking on way too much risk. I get it, guys, everyone wants to get rich, but investing is not the same as gambling. Mason Matthews. Leveraging your money can be a very powerful tool, but it puts you in a vulnerable position to lose money that you already don't have. An amazing quote by Warren Buffett is, "If you're smart, you're going to make a lot of money without borrowing." So let's stop using margins to make long calls on genius and use a method that will actually make you money every single time. It's always a better idea to be the dealer when playing blackjack, and that's why I recommend selling covered calls to those people who love dabbling with options. Moving on to number 4, we have investing without an emergency fund. Some of the pillars of becoming a successful investor are having a sound mind and a clear plan of attack. How can we as investors make the hard choices to leverage our money when we have no stable ground to support us with? The purpose of an emergency fund is to have enough saved to pay for unexpected situations when they arise, and not be scrambling around instead of focusing on your investing path. With that being said, a good place to start your emergency fund is to accumulate about 3 months worth of living expenses in order to have the right mindset of safety when executing your goals. Last but not least, the biggest mistake an investor can make is investing when you still have bad debt. When I say bad debt, I'm talking about credit card debt, car loans, school loans, medical bills, basically anything that will cripple you long term due to the high interest rates. The reason is, if you're expecting a 10% return on your investments each year, but you're still paying off these loans that have 15, 20, maybe 30% interest rates, it's almost as if your gains meant nothing. You're usually always better off paying what you owe first and then focusing on your investments afterward. Alright guys, that's today's video. Thank you for watching. If you like the content, hit that subscribe button and feel free to drop a comment down below on what you would like me to cover next. And as always, have a good day and stay hungry, friends.